Legends, welcome to the Daily Buyer Show, where we deep dive all markets as they relate to crypto. Today is the 26th of November here in Oz. Sure it's the 25th wherever you are. Thank you for joining. So let's get straight into it. We had PPI come out last night for me, so today, probably earlier today for you guys. And there's not much to report. It came in weak, right? So what that basically just suggests is that inflation is not a problem, or not a concern, we should say, at the moment. Disinflation's another topic, but we'll leave that for another day. But right now, there's nothing screaming that inflation's a concern, which just basically aligns with the Fed's lack of focus on inflation at the moment, and their focus on the labor data. And hence, the probability of a rate cut has now jumped up to 84%. It was 81% yesterday. So on the back of that weak PPI read, the market's expecting, with even more certainty now, a rate cut. However, as I've been saying since, over the past few days and for quite a while, the rate cut trajectory has been very volatile. We're still in a high rate environment. And unless the Fed heads towards a more looser stance on rates, basically, unless they suggest more aggressive rate cuts, I don't see a stronger bid coming in or reason to be overly bullish. My thesis still aligns with this being the potential liquidity catalysts that we have coming up. I've got it somewhere here. My thesis still remains that we're heading towards some type of counter trend rally for now. However, I will change my bias if the Fed shifts to a more aggressive loosening stance. So that is potentially QE or aggressive rate cuts. It could be any of those things. And most importantly, if we see it in the charts by monitoring net liquidity along with first and most important, Bitcoin structure, then I'll change my bias, as I've mentioned in most of these days. So hence, the rate cut is looking more certain for December, which supports some more bullish price action, at least in the short term. So let's just do a quick round the grounds on markets. Overnight, not really much to see in the macro liquidity picture. Nothing's really changed so far. We're not really seeing anything move in net liquidity yet. The balance sheet and the Treasury General account will get updated in the next couple of days, so we'll be able to see anything there. And reverse repo market, nothing notable. It's been down here for quite some time. Now, the yields the spread in the yields did give us a slight uptick, and that's again off the back of rate cut probabilities increasing and the weak PPI data, I'd say. And as you can see, the bond yields themselves came down. Now we really just want to be watching this 2-year, because as this 2-year heads down, it means the market is becoming more certain that liquidity is going to be more readily available, i.e. more rate cuts. So hence we're on watch with this 2-year, and we're watching the spreads. In the DXY, as discussed yesterday, we are seeing resistance at the high here and potentially a pullback. However, the DXY remains bullish. This internal bullish trend is at no risk until we get at least down here. So we're monitoring this historical pattern. We've been over it many times, but when the cycle's ending, we see this base and a macro bullish trend. We are seeing the base, and we've seen the start of a bullish trend, but to me, it's not confirmed as a macro bullish trend yet. Okay, the weekly is still bearish, right? So once we start trending above here, okay, that's the macro bullish trend for me. Okay, confirmed. Hence, we're still watching this signal because it is following the same pattern we saw last cycle ending. Now, if we're to invert this pattern, invalidate this pattern, a start would be getting below here, because that would start to reverse this daily bearish trend here. Okay. But again, we then need to see it kind of meaningfully moved, continue to move down. If we were to see that, we start to see this bearish structure developing, it builds more probability for bullish price action in risk. Okay, but we'd be looking at that along with other signals as they come through. Right, there's never, for me, in the way that I read markets, there's never one be all and end all signal. There's quite a few moving parts you always have to analyze, and DXY's a key piece right now. Now, if we jump straight into the indices, we've been on watch. We've been on watch with this daily structure that was tested, along with the daily bands that were starting to flip red. We've been on watch because we've seen historically that's what the pattern starts to look like when we test the daily structure. The bands flip red, and we start to get this distribution-like price behavior. Okay, now we've had overnight a very nice bounce, a lot more convincing if you are to be bullish, and we're still just watching the follow through now. So this is a danger range, really, because we're at the highs. We've had a first test of the highs which rejected and tested the daily structure lows. So this is on close watch for us, and the main thing we want to be watching. Now, I'll just quickly flip through SPX and NDX, right? It's all exhibiting similar price action. The main thing that we're on watch here for is kind of as a signal on the longevity of Bitcoin trajectory in current price action, because historically the NDX topped before Bitcoin, 280 days before Bitcoin, right? Here in 2017 and 2021, Bitcoin topped around 280 days before the NDX. The NDX kept moving higher, okay? And then when the NDX actually topped and turned over, Bitcoin was already transitioning into a full-blown bear market. Hence, if we map out the time range, if we're looking at round about another 280 days, that would take the NDX, that would suggest the NDX keeps trending higher round about till the end of March, end of Q1, which kind of aligns with seasonality, for Bitcoin as well. And that would support the thesis on a potential counter trend rally, because if the NDX still has that underlying strength, it's more supportive for some type of bullish price action for Bitcoin. And for me, based on my current read of the markets, that is a counter trend rally, and we'll discuss that more as we progress into Bitcoin. But if NDX is actually rolling over sooner, like this, before it even heads out to that 280 days, like let's say it's just turning over the next few weeks, for example, then I just don't think Bitcoin will have much juice in any type of rally. It will most likely be pretty brutal heading further lower. Okay, so that's why the indices are on major watch at the moment. So it is good for our short-term bullish thesis for the indices to also be bullish, and the NDX is looking a lot better than the DJI because we didn't get these consecutive deeper closes beyond the structure level that we got here in the DJI. In the X and in the NDX, geez, that's a bit of a tough one to say. In the what did I just do there? Deleted my NDX chart from here. That's a bit annoying. Let me get that back up. Sorry, legends. The NAS. Otherwise, I'll forget to do that later. In the NDX, it only had that one close below the low, but a quick recovery. So hence, a little bit more bullish. Sweep of the lows is quite common before trending back the other way. Now we are still on watch because the bands have crossed and we are still in that danger territory, in my opinion, where we just got to observe these cautions, right? But at this point in time, if we zoom out to the weekly, the macro is still bullish. Like the macro trend is still bullish. So there's no reason just yet to suggest not to be bullish here. If we're to see another sweep of the highs and then we're coming back down to the lows here, then that would most likely flip the weekly structure, which would be a major red flag, because you see here every time the weekly structure flips on the NAS, it typically means we're in for a deeper correction, right? You see here how the weekly structure flips. So hence, that's what we're on watch for. But as always, we're bullish until proven reason not to be. So cautions don't change our bias, but confirmed structure changes do. And right now, this isn't a confirmed structure change, okay? So hence, the indices continuing bullish can support our short-term thesis that we may see that counter trend rally developing over the course of, call it anywhere from December, Jan to roundabout maybe March. Now, timing is always that thing. Like no one can predict, well, who can predict anything really? And I usually don't even try to predict, but I just use all these signals as guides and context and just things to keep in mind, because quite often history does align, right? It might not be perfect, but sometimes it does align. And I believe the reason that that happens is because everything has somewhat of a cyclical nature. And that's why, I mean, when things are quite cyclical, there's often common triggers and patterns that play out within these cycles. Hence, we're just on watch, right? Timing is that thing. No one can ever predict timing. And that's the hardest part in trading is trying to think about timing. Now, lastly, the RTY had a really strong bounce. Now, why do I like that the RTY had a really strong bounce? Because again, it supports a potential risk bid, because the RTY is the Russell 2000. It's a small cap index. So that suggests to me there's a broadening of risk appetite. If the capital's not just densely concentrated in the Mag 7, which are the big, the big tech companies, if the RTY is getting a bounce, it means that there's broader appetite for risk, okay? And broader appetite for risk can translate into the riskiest of all markets, crypto. So that's where we are on the indices. NVIDIA, important one for us to keep in touch with. As I've mentioned on previous streams, NVIDIA can be a leading signal on the SPX, and quite often it provides a bearish divergence with the SPX. So it diverges bearishly from the SPX. I won't show it actually because I've done it a few times in the last stream. When it diverges bearishly from the SPX, it's been a warning sign of impending downside approaching. Now, there's an interesting dynamic where pretty much out of the Mag 7, it's now an AI race. Like, AI is the focus. Everyone's investing massive, pretty much everyone's investing massive capex into AI, whether it's infrastructure, growth teams, tech, all that sort of stuff. They're either building their own or buying each other's AI. So there's just massive investments in AI. And Google seems to be someone who may be taking the lead. So NVIDIA is the biggest company by market cap and typically has been the leader on trajectory for the SPX and the NDX. But something to keep an eye on is if Google is somewhat emerging, because actually I will throw the SPX on here. There is a divergence now starting to appear just in this bounce where NVIDIA was down 2.5% and the SPX was up, right? So the historical signal has been when the SPX does the bullish move while NVIDIA does the bearish move, right? That's the bearish divergence, because the NVIDIA is making the lower highs while SPX is making the higher highs, right? And that is usually followed with the SPX catching up to the downside. However, if there is some type of rotational behavior happening where Google is starting to potentially lead and absorb or attract a lot more of the capital, that's something to observe as well, because Google's just been on an absolute tear, right? Look at that thing. Congratulations to you if you are in Google and you've bought Google. That's it's awesome. So yes, that's what we're monitoring on NVIDIA. It is still had it's a pretty bad day considering the rest of the market rallied. So we'll just keep that in mind. Let's head into crypto. Now, starting with my favorite chart of the day. Legend, there he is. How are you, Rich? Hope you're well. Favorite chart of the day. Won't bore you guys with this one again. If you don't know what we're looking for, check any of my last streams, but let's just do a pulse check on it. We are seeing the daily, I'm on the weekly right now. Okay, weekly's pausing here at the highs. Now this is on watch for us. Still plenty of room for the weekly to come down to the bands, right? Without converting the bands and have a bounce. And if this was to happen, that would coincide with a massive rally in crypto, because just think about it. If money's in stables, it means it's not in tokens. And if money's moving out of stables, where's it going? It's usually going into tokens, right? So what this just suggests is we've got to keep watching this because we want to observe how it moves when it moves down. And importantly, if it keeps moving up, that's going to mean a lot more pain in store for Bitcoin and obviously the alt market as well. But right now we are seeing a little bit of a pause. And if it starts turning over, expect a bid in Bitcoin and across the altcoins. Now, we'll go back here. We'll take a quick look at Bitcoin dominance, right? I'm going to flick back out to the weekly. Now, yes, please, legends. If there's anyone in here at the moment. Oh, there's 3 people. Hit the likes if you can. Or future watchers, I guess. Hit the likes. That would be amazing. Thanks for the prompt, Rich. You're a legend. So, Bitcoin dominance. Right? So, a couple of things to point out. If you're using my bands, throw them on the weekly and have a look at what happens at these times when the bands cross bearish. Okay, so this is March 2021. That was when we had alt season, right? Bands crossed bullish here. Right? What's that? Jan 2023. That's when the Bitcoin led cycle commenced again, right? We had, for the first time throughout this entire cycle, we've had the bands cross red, right? And we've seen segmented outperformance in alts. So since this red cross. Now, the key signal that I'm tracking here on the bands is if it continues to show weakness, Bitcoin dominance showing weakness, that obviously tells us that altcoins are going to continue to outperform, right? That's the obvious signal. The signal that we have to be concerned about, or not really concerned about, but just prepared for, is if Bitcoin turns back up, reclaims the bands, and if the bands turn green again. Because this could give us two signals, right? And they're two kind of mixed signals. One is that Bitcoin reclaiming dominance. So let's go the bullish view first. Bitcoin reclaiming dominance and moving up could support a bid coming back into Bitcoin to support a new parabola, right? Meaning for price discovery. Because the only way from here, if Bitcoin is to go into a new price discovery and a new parabola, it has to reclaim dominance. Because if it's not reclaiming dominance, it means the flow of capital is not coming into it, right? The flow of capital is already out the risk curve. So if we want to see a big parabola on Bitcoin, or if you're in that camp where you're still expecting massive all-time high Bitcoin to go to 200K or whatever it is that I've seen out there, you need to see dominance pick back up. Otherwise, the bid's just flowing into alts. Now, if you see dominance pick back up, it's not as simple as going, cool, we're going for a new parabola. We've got all the other signals that we're tracking, obviously, our external liquidity bid. But most importantly, if dominance starts going up like this while price is going down in Bitcoin and crypto, that just means that it's a cycle. It's a further confluence of cycle ending, because capital within crypto is just moving back to the safety trade. So the crypto safety trade is to just go back to Bitcoin, right? Because you know that over time, Bitcoin is up and to the right over the long-term time horizon. So that's where you don't want to get tripped up. You don't want to get tripped up going, cool, Bitcoin's reclaiming dominance, it's going to go for a new parabola. Well, no, because if it's reclaiming dominance while price is moving down and markets are moving down, it just means that capital is fully exiting alts now. So if you haven't done the same, get out of alts. And it's just moving back to the crypto safety trade, which is just back into Bitcoin. That is the key signal to track in Bitcoin's dominance. And we'll just keep a pulse on that as we go. Before we move into Bitcoin again as well, let's look at ETH, right? Because if we do get a counter trend rally, ETH to me is still a high potential for a decent rotation. And because if you look back here, again, the weekly bands crossed bullish back here. Now, the last time it crossed bullish was down here, right? And we know what happened from pretty much COVID, post-COVID, to the end of the 2021 cycle. ETH went nuts, right? So this particular chart, ETH to BTC, using my my weekly bands, so using the bands on the weekly time frame, this is what kept me out of ETH pretty much the entire cycle. I bought ETH early in the cycle, when it hit $800 or so before the bull market even started, but I ended up exiting ETH in 2023 when I noticed that it could just not get beyond the bands, the weekly bands. So this is what kept me safe pretty much the entire cycle, because when the market was yelling, oh, it's ETH season through here, like all of these times yelling it's ETH season, I would just flick over here and go, well, it's not ETH season. It's still Solana season at the time, and it's still other altcoin season. every time we had those seasons, because the bands never confirmed to me, right? So hence my major trade during 2023 and part of 2024 was still Bitcoin and Solana. I never really rotated out of those until, well, later, right? And this is what saved me from a lot of ETH pain. And now we've got the signal. And if you actually look at how this price action is behaving relative to what it did last cycle, it's quite similar. It has the big move through the bands. It comes back and it tests the bands. It goes again. It does another big test. This is where you may be questioning again. But ultimately, the bands kind of respected green and it has its push. Now, obviously, the context is a bit different because at this part of the cycle, we were going into a parabolic phase. Right now, we are having more bear market signals than bull market signals. So there's two ways I'm looking at this. The first way is, actually there's only really one way that I'm looking at this right now. It's that there's still relative strength here compared to Bitcoin and the bands, considering that the bands are still green. And if and when we do get this counter trend rally that I've been talking about, I think ETH has still got lots of potential to move up and to catch some of those flows. So hence why I'm less interested in Bitcoin right now for these counter trend rallies as I am to consider moves in the likes of Ethereum and some other stuff, right? Because again, just the two signals we're looking at, dominance on the way down, still on the way down, and ETH to BTC is still showing me that it still wants to outperform. Bitcoin. Let me tidy up this a little bit. I've got some notes here. We all know our key levels. We've been discussing these levels for the past few streams. So let's just look at where we're at today in structure. We're still in what I call the make liquidity phase, where I believe the market is making liquidity here because we've already taken all the major liquidity, historical liquidity on the way down to where we are. And we're in this kind of no man's land territory where we haven't had the reactions from all this other liquidity we've taken. And the next major liquidity pool is down here. So if price wants to move up from here, in my opinion, it needs to make liquidity, then take it and move up. And that would actually be a bullish trigger for me on a potential counter trend long on Bitcoin, right? Or it could just keep going up from here. It could keep trending up. The main thing that I'm looking at right now is, so if you look at structure, daily structure from here, okay, to here, I'm skipping this because I'm calling this internal structure because it was swept, right? So we know that once that was swept and a new low was created, this is the new structure, okay? Now, I skip this because this pullback, again, is internal. It happened within this high and this low, right? So I'm just drawing primary structure. Where did we create a new low? Okay, and then here's the new high. And now since this high all the way down, we haven't created another new high yet. Now I'll draw your attention specifically to price behavior when it creates new highs. Okay, or lows. For example, if we were in a bullish trend, what I look for is I want to see 2 consecutive candles in the inverse direction of the trend. So see how the trend's going down? For me to start considering the high being developed, I want to see at least 2 consecutive candles, right? Until I see those 2 consecutive candles, to me, the continuation leg is still occurring. So now we've got 2 consecutive candles. So if it turned over from here, I would consider this a high. But if we didn't get 2 consecutive candles in the inverse direction, in this leg of price, I wouldn't consider this a high. I would keep going down. Now, there is obviously a little bit of discretion that I use with that, but that's just my general rule, right? So when I'm drawing, I'll just do an example, right? If I was drawing market structure, let's just go from down here, right? I'd go, cool, see, no, where's 2 consecutive? So now we're doing, this is a bullish trend, obviously. So to mark a high, I'm looking for at least 2 consecutive candles in the bearish direction. So here, cool, yep, that's a high, we got a low. There's no 2 consecutive candles through here, so there's no swing high for me. Here it is, that's a low. Now, we come up here, we do have 2 consecutive candles, sweep. There's your long trigger right there, right? SFP into what's developed now, because when we came down here in the inverse direction, we created at least 2 consecutive bull candles. So that's a valid high right there. And now we came down and we swept this internal low, right? There's the primary low. So this trend is still bullish until this low is taken, but it created what I call a complex pullback, where it creates internal structure on the same time frame within the primary structure, and then it swept its own internal structure. And because we have a bullish bias, when you see that sweep, trigger. That's your long trigger right there. Okay, so then as it moved up, do we have 2 consecutive candles here? No, right? So I would just skip that and go, cool, now we've got at least 2 consecutive candles, swing point. Right? That's just how I look at structure. So now bringing you back to where we are currently, right? So since this high, this is our last confirmed high because we had 2 consecutive candles in the opposite direction. So since this high, we tried to make a high here, didn't work, no 2 consecutive candles, none. Okay, we've got our 2 consecutive candles here. So now this is becoming somewhat of a valid swing point for me, right? Now, here's a little bit of extra. Do you use this points to add? So what do you mean, Rich? So now that we've got this high, this is still not a confirmed high yet. Do you still use these points in bullish context? Yeah, I still don't quite understand what you mean. But yeah, so all of what I just discussed, like, so when you're drawing the structure, I look for 2 consecutive candles in the opposite direction to create, before I'll classify this as a low. And then it's confirmed when it breaks the high. Right? So now that structure, and that's in a bullish context. And if we're in a bearish context, so we're coming down, I want to see 2 bullish candles in a row to classify this as a high. And then it's confirmed as a structure point when it breaks this low. Does that answer it, Rich? Ah, nice. Cool. So now, if we're just analyzing price here, now we've got our 2 consecutive candles, right? We've got our 2 consecutive candles in a row, which means that if this turns bearish now and comes all the way down here and crosses this low, this is now a confirmed new primary structure daily high. So that then means this, all we have to do on the daily time frames to become bullish is move back up here, right? Now, yeah, there's a bit of a lag. I'm not sure why that is. Sorry, legend. Now, here's one of the setups that I can point out to you based on what I just showed you in market structure and what we saw specifically right here, right? So see how bullish market structure here, okay? That's our bullish market structure. Here's our primary structure low. I'll color that in yellow. And here's our primary structure high. What I'll do is, I'll just do a quick bar replay so that I can show you, right? So, if you were trading back here, we've got primary market structure is bullish. Now, when price was here, I am bullish on the daily structure unless we start trading below this level, okay? So then when price, if we just play out price, now that we've got 2 consecutive candles, that to me tells me that if price pushes straight back up now or from here, this will be a new valid structure low, okay, once it breaks the high. And then let's say, for example, if it just went straight up here now, I would move this here and then this here. And that tells me I'm bullish unless this low gets taken, right? Now, what happens here is we go deeper, still bullish, no reason to be bearish. We're starting to get some signals on momentum fading. We've now had a previous day swept, okay? And obviously you can tell by the candle formation in itself that there's some seller momentum loss coming in. We had the previous day swept again. This time it closed bullish. At this point in time, you may have even taken a trade here and gotten, we know ultimately it gets stopped out because price comes back down. But at this point in time, you may be thinking, okay, great. Now it's showing these signals that it's ready to pivot. And maybe this is going to be our new low. I'll just get rid of this. Get rid of this for the moment. Get rid of this just to clean this up. All right. Cool, we get a move happening. Oh, we got some type of rejection candle there. Previous day swept pretty heavily. Oh, okay, now we got 2 candles in the inverse direction. So what does this mean? This means now that price is developing a complex pullback, I call it, right? A complex pullback is when within the primary structure on the same time frame, a new structure develops, and it's all internal structure. So my primary bias is still bullish, but what I've now got to understand is something else is happening at the very least, and we don't know yet if this means the market wants to reverse or if it wants to continue, but we need to now observe further signals. So because my primary bias is still bullish, one of the setups that I use is when price starts to create this internal complex pullback, I will actually look for shorts on a sweep of the internal low if I'm bullish, right? Because if I get a nice SFP into this low, that tells me that the complex pullback is potentially ending, sellers are getting exhausted. And if I get that sweep plus other entry triggers I'm looking for, that tells me that, okay, now this complex pullback might be resolving into this being the higher low, right? So if you see here, right, and then we mark this out. Now what I usually do is we've got a complex pullback, so I'll mark this out as an internal low. And we know what happened, right? Look, that in and of itself, to me, would be a trigger. So you've got the sweep. I'm trading with the bullish trend. We've got a complex pullback, but we've got an SFP now showing exhaustion of sellers here. And even if you just waited another candle, right? if you could, sometimes I enter on the SFP depending on what I'm seeing in the market. Sometimes I wait for the next candle to close bullishly against the SFP candle, and if I want to wait for even more confirmation, I wait for it to close bullishly against the original candle swept. There it is, and then trigger. Now, conservative stop loss is down here because this could still come down and still be bullish and take out all these lows. Aggressive stop loss is here, right? So there's no point even playing like position stop because we know what happened after this, right? But basically that in and of itself, you can see the entire setup. Like you could trade this thing if you wanted to. What I just showed you, that's a complete continuation setup, and that I use all the time. So now if we remove replay, can you see now how I'll invert the chart, right? Let me take everything off the chart just to make it really clear. And I'll invert the chart so it looks the same as what we just did, right? Now, remember, that's our high. And our current daily low is here, right? So if we observe the same thing now, one of the things I'm looking for is if price comes like this, maybe it does a complex pullback, just like it did in that example we just went through, comes back in, sweeps this low, and then bang, that's where, in this instance, right, I'll be looking for my trade. And if it's all the way up here, I wouldn't be putting a stop all the way down here. I'd probably be looking at how this SFP formed, and I'd be looking at my stop somewhere around here, right? Because I know that I'm invalidated here. Always put your stop where the trade idea is invalidated. Don't use some arbitrary measure or something like that, because you want to know that when you're stopped out, you're wrong. Your trade idea is wrong, okay? So here, I know my trade idea is wrong because maybe it wants to go even deeper, and that's okay. Then I'll wait for a new trigger, and if we're right down here, then maybe I might take my stop down there. But here, considering the strong bearish trend, I'm trading, it meets all the triggers of my system. If I see this just like I saw, that will be the setup. And obviously, you see it? It's exactly what I just showed you, right? When I invert the chart, you can see it exactly, right? So that's basically something I'm looking at the moment when I'm analyzing price, okay? Because yeah, our daily high, our current daily structure high is there. Now we've got the criteria to validate this as being a high, whether it's an internal high before price does this, okay? And then comes down, because bullish, still not bullish until we get above here. And then when we come down here, if we did this, then this would be our new primary high. But on the inverse, the only way that I could consider a long on this thing right now, based on the daily, is if this does confirm as the high and comes down and sweeps here, right? If it sweeps here, and then I'll probably wait for other entry signals and triggers, because it's still not confirmed bullish, right? Because it has to get above here to actually confirm bullish structure. All this does is, if it gives a strong SFP, is it just shows intent, right? It just gives us a signal on intent that the market might be intending to move up here, but it's not confirmed until we get back above here, right? Turn these levels back on. So that, in a nutshell, gives you my current context on the price action. On the weekly, still developing, right? We've got a potential inside bar developing. Again, for me to be a lot more confident in some type of macro bottom, and for me to be switching to more of a bullish bias, I'm looking for, just like the pattern I just showed you on the daily, like price just, whatever patterns you take on one time frame, you can just extrapolate out to other time frames, right? It's still the same. If you're trading market structure and I'm primarily a market structure trader, then the pattern's the same, right? A shift in market structure is a shift in market structure. It's all the other little signatures and nuances that you learn along the way that build into your edge, rather than just looking for those changes in market structure, those shifts. But yeah, so on the weekly, for me to be macro bullish, to shift my bias, because as we know, I'm bearish, and I think we're getting a counter trend rally unless the weekly develops more like this, right? We do get the move up. Maybe we come into this weekly displacement here. The bands are coming down and we push down and we see that exhaustion coming through the bottom here, and we get the reaction. Maybe we base test it again, and that would be that 3 drives, right? An even stronger signal if we get a response, and then bang. Like, that's what I mean by I will change my bias if price action tells me to do so, right? And price action is my leader. It's what I prioritize, and macro helps me understand context. But I will always side with price action. If the price action tells me to be bullish before the macro, I will be bullish before the macro. And then if it tells me to be bearish again, I'll be bearish, right? I'll always side with the price action, and I'll let the macro help me understand context and environment. Now, that's pretty much all I had planned for this stream, legends. Unless you want me to go through anything else, or you have any other questions or anything like that. Oh, I think I just saw we ticked on 5 viewers, but now we're back down. Four's my current record is 4 live viewers. I think I just saw it tick over on 5 for a minute. Rich, it's all you. It's if you want me to check out any other charts, just let me know, or if you got any other questions or anything. Yeah, almost. I'm going for that. Oh, it says 5 again. I think we got 5. I'm going to take a screenshot. Took a screenshot of our 5 live viewers. It's a new milestone. All right, so ETH, we'll just have a quick look, might as well. All right. I mean, it doesn't take a genius to see that the the structure is bearish on the daily. The thing with ETH is, for me, applying my same, thanks, legend. Applying my same 2-candle principle, the ETH weekly structure is still down here. So the weekly, hence why when I even look at ETH to BTC, and I still see that the bands are still bullish, according to my system, the weekly is still bullish as well. So as soon as the daily on ETH just flicks over to bullish, which is only required to conquer this high, as soon as the daily flicks bullish, the weekly and the daily are in alignment again. Okay, and then that hence why I'm more likely to trade ETH and more bullish on ETH than I am Bitcoin at the moment. It's purely because the structure tells me to do so. Now, yes, this is a pretty deep weekly structure, but it is what it is. You know, I don't control how big the structure levels are. So, you know, if this is going to do something like this, right, and maybe it does go for its last, if this counter trend rally happens and it's a big one, then, you know, it wouldn't be out of character for ETH to be able to go back to somewhere near all-time highs at least. It all depends on what kind of relative strength there is. But when Bitcoin was topping in 2021, Bitcoin hit its high first, and a lot of the stronger alts, or the ones who were still going to make new all-time highs, hit their highs after it or in that double top. So, you know, to me, when I look at ETH and I look at the weekly structure, dependent on the size of this counter trend rally, ETH looks like a better play to me than Bitcoin does, because the weekly, in my view, is still bullish. Okay, and the weekly highs here, if I mark out our weekly levels and our day on the daily, right, we've now also satisfied our criteria for a potential high coming in, but the dailies here, right, so this is our daily range now, okay, but we're now within the weekly range, and we're now in what I would say is the discount part of the weekly range, right? So if you were someone who was bullish on ETH, we are trading now into the best priced area to be getting long on ETH, right? Now, that doesn't mean I suggest getting long or even that I am getting long, but I'm saying in general, within a range, you want to be long from discount, which is the lower part of the range, and you want to be short from premium, which is the higher part of the range. So hence, yeah, like just a real clean and easy view on ETH there. Let's just go look at some of the monthly and the quarterly time frames. Right, we've got the underside of the October lows now. We'll mark that out. Doesn't look like that's going to be reclaimed this month. So that's the underside there. Where's our quarterly levels? Okay, there's a quarterly low. That's interesting. So we've got an inside bar on the quarterly. All right, so Q3 lows. We still haven't even tapped Q3 lows, right? So that would be a big level that I'd be watching on ETH right now, because if we've still got a whole month left, month and a bit, a month and a week left in the quarter, and Q3 lows are down here. If we are to go a bit lower, I'd say there's a good case for, again, when I say a bottom, I mean bottom in the context of if everything is aligning for a counter trend rally, but we're not ready for it yet. If there's one more sort of basing sort of thing going on, I'd say this is a good area to be on watch for ETH. Right, anywhere pretty much now down, if we get that signal down into here, into the daily, and it flips, right? Because remember, all that's required is the daily to flip on ETH for the bullish and the daily to be bullish again. So then I would actually then be looking to go long on this pullback to head back up. All right, legends, been almost an hour. I hope you guys got something out of that. Rich, thanks again for joining me, legend. Appreciate you. Hope you can get to bed. There's no decent time for you when I'm streaming at this time, but hope you have a good sleep, legend. And don't forget, like, subscribe, follow me on X, all that kind of stuff. And we'll be back again tomorrow at the daily close. Every day, daily close. Thanks, legends. See ya. Oh, sorry. Yeah, there is a lag. I just got that comment come through, Rich. Let's have a look. So zoomed out on ETH. Any thoughts on them being one giant consolidation? I mean, you can make a case for it, right? So if we just delete these levels at the moment, right, if you said this was, I mean, this is basically the 2022 bear market, right? I mean, this typically isn't a good sign, sweep of the range low. You know, if you're playing it as a big range, you'd have to be looking at the range mid here. Right, and we're bouncing right on the range mid. So again, this is more case now. If you were to say that, I don't know about this being one giant consolidation. Yeah, it could be if this is maybe like a multi-year cycle. But it's still a horrible thing to trade, right? Like, if you were holding this for consolidation, like let's say you just bought anywhere in here and you were holding all of these, it's pretty ugly. I mean, if you're just putting this, if you're just a believer in ETH for the very long term, right? You just have this as part of your diversified long-term crypto reserve kind of thing, where you're just making some calculated bets on the crypto as an industry. You'd take a mix of maybe two or three, like three or four maybe tokens that you've done a bit of research on, and yeah, sure, you know, you're kind of eating this, but yeah, I kind of look at it and think, oh, maybe as a, yeah, like if you're looking at from this context, right, from a yearly consolidation, it's kind of, these are all inside candles on the yearly, but the problem is if this year closes as a sweep, we've kind of just swept the consolidation highs and there's a flat open down here on the other yearlies, so that that doesn't paint the greatest picture. Hence why I just don't like, I wouldn't be holding these things for a very, very long time. I think you know, if you're playing this on this bigger time frame like this, it builds context for a potential bounce here back at the mid. And if you're looking at structure like this sort of thing, low, we got our two highs, we got our low, this was your major warning exit signal. No, sorry, not exit signal, this was your major warning if you're looking at the monthly time frames. Broke down here. This is why the monthly to me isn't really that actionable. It's a very lagging time frame in my trading, so it's usually some type of lagging confirmation. Or when I see these triggers, they're early cautions, but you got to be down on the lower time frames, because if you're waiting for confirmation on this signal of a structure shift, you've pretty much waited till the whole move's played out and you've lost 45% and it's only going to go down another 20%. So yeah, so, and then it came back down. You could call this maybe a deviation, right? You got the weekly sweeps here. So that would potentially, now that it created a new high here in terms of structure, it shifts this to be the high, this to be the low, right? And that's just a sweep of those lows. Now we've got a new high here, but the problem we face again now is, just like this signal here, this is sweeping this. So does that mean it's going to come all the way down to this or down to here? Hence the monthly is not too actionable. The only thing I'd look at this and say is we're hitting that monthly range mid, which also it means we're still above the Q3 lows and we're in an inside candle here. So if this quarter closes as an inside candle and price is still around here, maybe in Jan we sweep this and then that's our final kind of push sort of thing that aligns with the short-term liquidity cocktail timeline of potentially Jan to March. That's a consideration that you could make. But yeah, then back on the weekly, yeah, it's kind of like just like what we went through. Cool. Any other questions, Rich? I'll sit here for a few minutes because of the lag. You too, legend. Have a good sleep. I'll catch you around soon. Thanks, guys. See ya.